The Commitment of Traders report is one of the most important tools that traders can use to track or to look into the positioning of large institutional money. Now, this I know sounds too good to be true, and there are some caveats. And in this video, we're going to be talking about, first of all, what is the Commitment of Traders report?
What the hell am I looking at?
We're going to talk about how traders can use this data to their advantage.
Right within your heart.
And we're going to talk about how we, my team and I, who have built this software that you're looking at, can decipher some bullish and bearish biases from the data itself. Let's jump in. Welcome back to my channel, guys. As we get started, let me just ask, if you like this sort of content, make sure to hit that thumbs up button, and let's talk about the Commitment of Traders report. It is a very, very cool kind of report that we get each week from the CFTC. So the Commitment of Traders report has three components that usually come out. There is the commercial data, which is what businesses are buying and selling that are reported to the CFTCs. These might be, I like to think of like this as like the gold mining companies that are using the futures market to hedge their mining gold and copper or whatever they're mining. They use the futures market to hedge their exposure in commercial business. Now, we don't really pay attention too much to the commercial side of the Commitment of Traders data, simply because this is not really speculative or kind of forecasting where markets are going to go next. What we focus on is the non-commercials data. Now, the non-commercials, these are people who are not doing this purely for a business hedge or to convert currency to another currency so they can do business somewhere. This group, the non-commercials, is going to be your hedge funds, your pension funds, large speculators in the financial markets. This is, as traders and investors, where we really want to look to get a better picture as to what the quote-unquote smart money is doing with the financial markets. Now, this is what we focus on within our software. Now, other places, websites, they might have a mix of commercial data and non-commercial. We really focus the non-commercial data in our software here. So what we're seeing here on the screen is the overall long and short positioning when it comes to many different assets and symbols, commodities, indices, and currencies. The last component of the Commitment of Traders report is the non-reportables, and this is small speculators in the market. And we're not going to really get into this topic too much because the small speculators are not really what we're after. We're really looking after what hedge funds and smart money is doing in terms of speculating with their positioning. So on the screen here, what you can see is basically a color-coded visual representation of the Commitment of Traders data. This is something that my team and I have built to help traders, including ourselves, spot what institutional money flows are looking like. And here's the first thing you need to understand. There's two different tables, the latest weekly COT filing and the overall net positioning. We're going to talk about both of these, but let's first talk about the net positioning chart. This net positioning chart basically will show you the overall exposure proportionally long or short in terms of contracts held currently by institutional money. Now, we get this data overall. The Commitment of Traders data is a weekly report, and there is some caveats to it. We get Tuesday's data every Friday. So trading up to Tuesday gets reported on Friday. So there's a bit of a delay here. So this report might not be exceptionally useful to scalpers or intraday traders, but for swing traders, position traders, or even investors, the Commitment of Traders data can be very, very useful. So check this out. If we take a look at the overall exposure, we can see, for example, that the JPY or the yen has a large short to long ratio. And if we were to take a look at, for example, gold has a large long relative to short ratio. And these things fluctuate over time, but the overall net positioning or net kind of long to short proportion changes very gradually. This indicator, this section of the Commitment of Traders data chart that we've built here on the Edge Finder is more long-term oriented in its scope. It's really designed to be looked at on a longer-term basis because these things change very, very gradually. Like you might see gold become more bearish, but it might take 6 months to really change dramatically. So this section is more for long-term position traders or even investors, in my opinion, and that's how I use it. Where traders might find a little bit more value is the latest weekly commitment of traders filing. And we've built this table down here below to really parse this out for active traders, both intraday and swing traders, to get a grasp as to what the latest buys and sells are looking like in the latest filing. And I want you to picture something for a second. Imagine you have this banker friend and he has like a $10 million portfolio and he invests and trades within this account, and he has a 60-40 stock to bond ratio in his account. Now, if he told you that he was just selling a little bit of his stocks, just a slight bit, and it changed from 60% to 59%, that wouldn't be very meaningful to you. But if he told you that he's selling 20% of his stock portfolio and instead buying 20% into gold with his portfolio, that would be really useful information for you, because again, this guy might be a savvy investor. He might see some things coming that has changed his perspective, and you as an individual trader might say, oh, that's some useful information. I might consider looking into those same assets that he's looking at. Of course, you don't want to just copy just because the COT data changes. I think that's a really dangerous strategy because there is some lag built into this, but seeing the general money flow of savvy investors and traders into or out of a particular symbol or security can be really useful information. I use specifically the commitment of traders data to align myself a little bit more closely with what institutional money is doing. Of course, there are also other things involved in what I do to enter and exit trades, and I'm not just solely copying the commitment of traders data because that's not the full picture, but it can be very useful to keep an eye on. So let me show you this. In terms of the latest weekly COT filing, we can break this down and say, well, what did they change their positioning on the most of in the latest weekly filing? So if you see a big positive number, what that tells you is they really shifted their bullish exposure. They might have closed a lot of short contracts as they did with the Nikkei, which is the Japanese stock market, or increase the bullish exposure or long contracts traded. Now you combine these two things and you get a pretty bullish week over week change, and that's where we have this net percentage calculated column for traders using our tools. By the way, I do want to just pause and let you know that if you'd like to get access to the report that we've built here at A1 Trading, my software company that builds tools for traders, specializes in making this stuff a little bit more approachable to the average trader or investor. If you'd like to get access to this report, I'll leave a link down below in the description to our website where you can find more information on the tool, and there's a promo code and discount down below in the description. Now, we also have things that they've sold the most of, and in this case, you can see the Dow Jones got sold pretty heavily, the British pound got sold aggressively, the Swiss franc got sold, platinum. These are pretty dramatic shifts. And when we see these big dramatic shifts, that could tell you as a trader that perhaps look out for some of these moves to materialize or even continue in the markets. If, for example, we see a large accumulation of gold over time and each week the COT data shows us big institutional buying, that could be a really interesting trend to catch wind of and even play into. In fact, a very similar opportunity presented itself a couple months ago. The commitment of traders data showed that institutional money was getting very long on gold, and then the market just ripped higher. Check this trade out. This is my gold and oil trades, which are just massive trades for me. I wish all my trades looked like this. This is also giving me extra confidence with my current positions as gold and oil continue to be the most heavily bought proportionally on the list here from the commitment of traders data. So I like to see that. So that trade was a real on my live brokerage account example of how I use the commitment of traders data to help spot opportunities in the financial market. When you see institutional money starting to buy something or starting to sell something, it's not a 100% guarantee that that market's going to just go in that direction right away. But oftentimes you can see accumulation over time forming, and then you can look for opportunities to potentially trade in that same direction. That's how I use the commitment of traders data in my own active trading, and why we spent so much time building these reports to show overall, again, where money seems to be flowing on a week over week basis. Now, some information about our tool. We update this every week. As soon as the data comes out, within an hour or two of the data releasing, we have the data presented here and automatically generated and showcased for our users. We check every week. Again, the software automatically pulls this data from the CFTC. And I just want to say the CFTC does present this data. You can go pull it up on their website. The problem is it comes in this horribly ugly text file that is impossible to read. So instead, what we've done is we pull that text file in, and what our company, the software that we've built here does is it strips all the pieces out and it generates an easy to read report. So you don't need to buy anything for the commitment of traders data. You can just go get it from there. But if you're looking to use proper tools that can help you spot opportunities in a cleaner, more presentable, and honestly just more enjoyable way, consider checking out our product. Again, the link is down below in the description if you'd like to get some more information about the tool. You can also chat with a representative of my staff by clicking one of the links down below in the description as well. Thank you guys very much for watching. Have a great day. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.